So I believe you are all familiar with this VAT, withholding tax, and the like. So we are going to share more light on it today, and don't hesitate to ask questions as we move on. You can unmute yourself, you can raise your hands, you can use chat box to drop your questions. So we'll make sure we attend to every question as we move on. Okay, so this is House of Accountants, Professional Services, and my name remains Olashore James. Now, let's commence. So, first of all, let me introduce you to what we call VAT. Let's start with VAT. VAT in Nigeria is a consumption tax which is imposed on the value added to goods and services at each stage of production or distribution. What do we mean by each state of production or distribution? There's one VAT we call input VAT, that is at the stage of production, and there's another one we call output VAT, which is at the stage of distribution. It is one of the key sources of revenue for the Nigerian government. That is where Nigeria is getting most of the money. Currently, I don't think petrol or petroleum or our crude oil is actually giving us what we are expected. But the one that has been covering for us, that has been there for us to finance, is mainly the tax, which is value added tax and the company income tax to say. But today we are not looking at company income tax, we are only looking at the value added tax. Now, legal framework, VAT in Nigeria is governed by Value Added Tax Act. So value added tax has its own act on its own, separate act, which is different from Company Income Act, which is different from Petroleum Act, which is different from Pioneer Act and the like. So this capital gain tax, they all have their own acts that governs them. The same thing to value added tax, which was enacted in 1993 and later amended in 2007 and 2011. So previously it was 5% rate, but currently now it is now 7.5% rate, which must be filed on or before the 21st day of the month following the month of transaction. What it means is this: if the transaction takes place in this October, okay, you are expected to file the transaction on or before 21st in the next month. So the following month, not in the month in which the transaction actually took place. Now, the VAT Act in 2014 requires that you pay your VAT on all goods manufactured or assembled in or imported into Nigeria, and all services rendered by any person in Nigeria except those specifically exempted under the law as follows. So we'll be looking at the goods that are exempted. We are also going to look at the services that are exempted from VAT and the like. Now, let's go straight to that exemption. We'll be taking it step by step. Please make sure you ask questions as we move on. Now, what are the taxable goods and services? Maybe we should start from there. What are taxable goods and services? VAT is levied on a wide range of of goods and services. Some goods and services are exempted from VAT, while others are zero rated. There are some that you don't even need to pay VAT on it if you are involved in this type of transaction or goods or services. Where there are some that good, you are going to pay VAT on this, but it's going to be zero VAT. What does it mean? For those who are exempted from VAT, there's no need of filing at all, as long as they are exempted from VAT. Okay? But if you are zero rated VAT, it doesn't mean you are exempted. The only thing is that you are not paying anything. So it means you must still file. And what you are going to file is zero. You are going to file nil when you are filing for VAT. So let's look at all these items one by one as we commence our. Now, accepted goods are those which are not subject to what? Are not subject to tax or VAT. What are the goods or services we are talking about? All medical and pharmaceutical products. Why are they exempted from VAT? It's because they are trying to encourage people to go into medical and what? And pharmaceutical products. And as well, it's going to help the citizens, it's going to help the people. So they don't want to put much burden on that particular industry. That is why they are exempted from what? From VAT. They are essential products and what? And services. Then basic food items. We all know that food items are also very, very vital and important. So government don't want to put much burden on them. And that is why they say, good, no problem. They are also exempted from what? From VAT. Please just give me like 1 minute. Let me try to charge. So books and educational materials. Books and educational material also, they are exempted from VAT because they want to encourage people to go into education, okay, to go into education. Then baby products, they are also exempted from VAT. Fertilizer, which is locally produced, agricultural and veterinary medicine, farming machinery, and farming transportation equipment, plant and machinery imported for use in the export processing zone or free trade zone, provided that they are 100% production of such company is for export. So they are all exempted from what? From VAT. So we are just starting. You are just joining, you have not missed so much. Now, plant machinery. So we have plant machinery and equipment purchased for utilization of gas in downstream petroleum operation. I believe you all know, we all understand that. So any plant or machinery and equipment purchased in the process of that is also exempted from VAT. As we will start mentioning all this now, you will start seeing what your company is into and what are exempted or should be exempted from your company. Now, tractors, plow, and agricultural equipment and implements purchased for agricultural purposes. Proceed from the disposal of short-term federal government of Nigeria security and bonds. So if you invested your money to buy government security, so there's no VAT on that, okay? Maybe you purchase bonds or security and the likes. Then proceed from the disposal of short-term state, local government, and corporate bond, including supranational bonds, limited to 10 years with effect from December 2021. What this means is that, see, as long as it's not more than 10 years, so you are free. I mean, it is accepted from VAT. Now let's look into the zero-rated VAT. Zero-rated VAT means the goods and services which they are exempted from goods and services. The applicable rate is 0%. So it means if you are into that type of production and your total sales is 20 million naira or is 15 million naira or whatever amount it may be, it means your VAT will be 0. However, you are required to file for new. You just file new instead of paying any amount. So you are not paying anything, but you must file as 0 rated products. Now let's look at it. All non-oil exports are 0 rated. What do you mean by it? All non-export? It means like cocoa, like soya beans, any agricultural products that you export out of Nigeria to other country, they are 0 rated VAT. You won't pay any VAT on it. Why? Because government want to encourage people, okay, to export, to advertise, to make the products in Nigeria known to other countries. And they believe that when you are selling to other country, maybe to America or other country, you are going to get your money in hard currency. And by the time you bring that to Nigeria, it's going to assist us, especially in these times of dollar rate and every other thing. It's going to help us in boosting our dollar and our exchange rate as well. That is why they also encourage citizens to go into that. Now, this means that all input VAT incurred in the production process up to the point of export is what? Is refundable. What do you mean by input VAT? It means the VAT you paid during, at the point of raw material. Maybe you are producing, you are into production of semi products, and you have to buy raw material from someone before you use it to produce something else, before you now export it to other country. Okay, now that material, raw material you buy from other company or from individual, the VAT they are going to charge on their whole, maybe it's 20,000 or whatever. That is what we call input VAT. That is what you are paying, which is your input VAT. Now that input VAT, the government is going to refund that to you, because you are not going to charge VAT on the good you are selling to the other country. Don't worry, by the time we get there, I'm still going to explain that much better. Now, goods and services purchased by diplomats. Who are the diplomats? These are the people that are, they are like a foreign ministers, ambassadors. Okay, so any goods or services purchased by the diplomats is also 0 rated VAT. Okay, if your company or your people that are part of the diplomats and they have been paying or filing their taxes, VAT, you just have to educate them that they are not supposed to pay VAT. It's supposed to be 0 rated VAT. Goods and services purchased by humanitarian donor funded projects. We all know the meaning of humanitarian. Those charity organization like cooperative society and so on. So their goods and purchases, goods and services should also be what? 0 rated. So if you know or you work in NGO and the like, so you should know that whatever they are buying should be 0 rated. Okay, so let's take it step by step. Exempted services, there are some services that are also exempted from VAT. And the first one, so exempted services are services that are not VATable, not subject to 7.5% VAT. And this includes what? The medical services. Okay, so if you are working in hospital, if you are working in a clinic, you know that you are not supposed to be paying what? VAT on any services rendering to you. Then services rendered by community banks. So if you know any banks that are into their the service is just like a community banks, like a what do you call them? Like all this microfinance, like all this cooperative bank. You should know that they are not supposed to pay VAT. They are accepted from VAT, though they are rendering services. Okay. Then people's bank and mortgage institutions. VAT is exempted only on the primary duty of mortgage institution. So their normal service, that is the cost of their business, their core business is exempted from VAT. But as long they deviate from that service, they move away from their main business to another thing, then that particular transaction is going to be charged. The VAT is going to apply on that particular transaction. That is what that line is trying to explain. So please don't forget, as you move on, if you have any question, don't forget to drop it, and I will make sure I attend to that as soon as possible. You can as well mute or mute yourself. Now, we said any other activities, contract execution. Maybe there's a contract. Their main duty is not to execute contract, but maybe in one way or the other, they were able to win a contract. That contract at the point of rendering their service or whatever on that contract, carrying out that contract, there's going to be VAT. Whatever goods or services they purchase at that point, there should be VAT on it, and they have to pay and remit to the authority. After their primary banking function attracts VAT, okay? Then the next one is plays and performance conducted by the educational institution as part of learning. So as if you are working in a institution, you are working in a school, you are working in a university and the like, and whatever your service or your conduct still around your educational institution, that is your services still work around that area, maybe plays and performance, just make sure that, just be rest assured that you are still VAT exempted, except you are going out of the core, out of your normal services, out of your normal business activities, or exported services. So if you are rendering services to outside, that is exported, out of the country to other country, because the government want to encourage people to, to bring more dollars, to bring more hard currency to the country. So they are exempted from paying VAT. Now, VAT on commercial rents. Yes. If you live in a one flat or 2-bedroom flat or whatever, your VAT should be 0. That is, you are not even paying VAT at all. You are exempted from paying VAT. But if you are using that apartment for commercial purposes, that is like office, like making use of this as a factory and the like, then you pay the VAT on it. So VAT on commercial rent, which is 5%, and should be paid by the tenant on rent paid for use of property, as long as it's for commercial purposes. Okay. Now, how do we register, and who should register for VAT? Now, registration. Businesses with an annual turnover above a specific threshold must register for VAT with the Federal Inland Revenue Services. I believe you all know that it's only Federal Inland Revenue Services that is collecting VAT. Okay. Now, in this case, what are the threshold we are talking about? The threshold here is 25 million and above. As long as your revenue is up to 25 million and above, you are required, you are mandated to register for VAT, and make sure you are filing your VAT regularly. If you are not exempted from VAT, if you are exempted from VAT, you are free. And if your VAT is zero rated product, you must file, but you are not paying VAT. That is what it means. But if your revenue is less than 25 million naira, congratulations, you are not paying any VAT, as long as it's not up to that threshold stated by the government. Who should register for VAT? Both individual and corporate bodies, as long as they are trading in goods and services. So individual should register, corporate body also should what? Should also register for VAT. As long as you are selling and buying, you are trading in goods and services, and your revenue is above, is up and above to 25 million, the threshold. So you are required to what? To register and to pay your VAT as at when due. How do we register for VAT? Once you register with the Federal Inland Revenue by completing taxpayer registration input form, submit copies of prescribed documents. They are going to give you documents. They are going to give you documents they need. Okay? You are going to need your TIN number, which is taxpayer identification number. I mean, they are going to need your CAC documents when you register the company. They are going to need the shareholders, and I think what they need is not that much like that. Then once you register, you are going to get your TIN number for tax purposes. Then you are automatically registered and authorized to collect VAT and to remit. Okay, you collect and then to remit. When to register for VAT, all taxable persons are expected to register for VAT immediately they are registered with Corporate Affairs Commission, CAC. So immediately you register your company. As you are registering your company for CAC, then make sure you are also registering your company for tax, which is your TIN number. I remember when I was registering House of Accountants, immediately we finished the registration and want to open bank account for House of Accountants. TIN number is part of the document required by the bank that you must get before you can open a bank account. So it means there's no way you will register your company without getting your TIN number if you want to get your what? If you want to get your bank account customized with your company. So it is very, very important. Okay. Now, vatable person. Who is vatable person? A vatable person under Value Added Tax Act is a person other than a public authority acting in that capacity who independently carries out in any place an economic activity as a producer. That is first one. If you are a producer, if you are into manufacturing, that is one. Wholesaler, trader, supplier also will pay VAT, including mining and other related activities, or person exploiting tangible and intangible property for the people, for the citizen, or for the service for the customer, as long as you are into that service. As long as you fall into this range of service, you are a vatable person. You must pay the VAT. Okay. Now, vatable service. All services rendered by any person in Nigeria, except those specifically exempted under the law. I believe we have discussed services that are exempted under the law. We've talked about the medical and educational services and the like. Now, example of vatable services are services rendered by lawyers, engineers, accountants, contractors, and consultants, etc. That is why when your auditor wants to send invoice to you, they are going to put vatable amount there, the VAT amount there. So if your lawyer wants to send their invoice to you, they are going to put VAT. If your consultant want to send their invoice to you, they are going to put their VAT there because it is required by what? By VAT Act. Okay. Now, a taxable person is required to register for VAT within 6 months of commencement of the act, or within 6 months of commencement of what? Of business. If you have been in operation, your business have been in a system for more than 6 months, and you have been enjoying the services, you have been billing people, you have been collecting, you have been getting contracts and getting money, just make sure that you are eating what belongs to government, and you will soon formate it, because you should have registered immediately. Is within, I mean, immediately you are up to 6 months of commencement, or that you have commenced your business. Okay, except if you are not up to 25 million threshold. And even if you are not up to 25 million threshold, that does not stop you from filing new. You still have to file your VAT new. Doesn't mean that you will not file at all. The only thing is that you are not paying because your revenue is not up to 25 million naira. So I believe we are getting that gist. Now, valuable person has an obligation to register for VAT and payments. Okay, so you have obligation to register and to make payment to government. Okay, all right. So I think there's no question for now. Now I want us to move into input VAT and output VAT. Just be keeping your question for now. Once I'm done with this part 1, because we are actually looking at 2 topics this night. We are looking at VAT and we are looking at withholding tax. So once I'm done with VAT aspect, I'm going to open floor for questions or contributions. Then after that, we move into withholding tax aspect of it. Now let's differentiate between input VAT and output VAT. And what does it really mean? Now, input VAT refers to the value added tax paid by a business when it purchases goods and services from other business. That is point 1. Point 2 is that it is a tax levied on the value added at each stage of the supply chain. I'm still going to explain, which means that each business in the chain collects VAT on the value they add to the product or services. So, we have raw material. We have another stage that is semi-raw material. We have another one that is final. Don't forget this meeting will end in the next 4 minutes. So just use the same link to join again so that we can continue anywhere we stop. So we have in stages. Okay, for example, there's going to be some people that will bring out raw material from the ground. Okay, maybe like farmer, your cassava, your cocoa, and the like. That is first part. Assuming we are using that, then another person will transform that cocoa or cassava into something else. But that is not a final product. Then they will sell that product or that material to another company. Another company will also do some production process to make it a final product. Now, at each stage of this production, at each stage of this process, there's going to be VAT on it. That is what we call input VAT, input VAT, input VAT. They are still at the stage of production, not at the stage of distribution, not at the stage of selling to customer. Don't worry, I'm still going to explain that much more better. Now, businesses are allowed to claim a credit for the input VAT they have paid. This means that they can deduct the VAT they have paid on purchases from the VAT they have collected on sales. Now, let's say company A will buy raw material from Mr. Y. So company A will buy that material, and company Y that is selling material to company A will charge VAT on it. Let's assume the VAT they charge on it is 20,000 naira. When company A use that material they purchase, they will use it to produce their own final products, and then they will sell it to another customer. At the point of selling this material now, this, let's assume, is the finished product now. At the point of selling this material to their customer, they are also going to charge their own VAT if it is charged, if it's not exempted from VAT. Okay. Now let's assume they charge 25,000 naira as VAT to their customer. That's VAT they are charging to their own customer is what we call output VAT. Okay. Then the VAT they paid when buying the material from Y is what we call input VAT. Okay. Now that input VAT is supposed to be refunded to the company A, but normally what they are going to do is that they are going to say, fine, there is 25,000 naira charge, VAT charge on this. So they are going to pay the difference between the 25,000 and the 20,000 they paid. So the net of these two is what they are going to remit. And that is why we have the input VAT, the output VAT is what we call VAT payable. While the input VAT is what we call VAT receivable. Okay, if you have been familiar with that or if you have come across of that before. Now, this meeting will end in 1 minute. Don't forget to join after the 1 minute. So I will wait a bit to join. Now, let's continue. I believe that is clear. Input VAT is essentially the VAT that a business inputs in its accounting records and is treated as a cost until it is offset against the output food. So what we normally do is that the input VAT, we always add it, okay? Especially if you buy assets. If you buy assets, you will capitalize the input VAT. The VAT you are paying on that asset, you will add it as a part of the cost. But if you are buying raw material, you are buying cost inventory, that is where you are going to separate it as VAT receivables. Then when you are selling, your VAT payable will... Okay, so I believe you are all back from where we stopped. So let's continue from where we stopped very quickly. Okay, so like I said, so business can claim a credit for the VAT paid on their purchases. So you can claim it. You can go to federal revenue and claim your VAT input, but it's very difficult because it's a process and it's very difficult for government to pay you extra money or whatever. So the best thing is to make sure that you treat your input VAT and output VAT properly, and you are paying the net to the government, because I'm not sure government is ready to refund anything. Though they are going to refund, but the process is going to take so long. Okay. Now let's continue from where we are now. This means that they can offset the VAT they paid against the VAT they collected, resulting in a net VAT liability, just like what I've explained. Input VAT is VAT paid on raw materials or goods and services used for production, sorry, just a minute, used for production for resales of goods imported directly for sales. Okay, let's move on. I think you are good to go with that input VAT. Let me quickly touch output VAT as well, even though I've already touched that aspect. Output VAT is the VAT that a business charges its customers when it sells goods or services. So if Mr. A or House of Accountant want to render service to any company, we are going to put our cost of service and we are going to put VAT at 7.5%. That 7.5% we are putting is what we call output VAT. Okay. Now let's continue. It's also known as collected VAT, which is the same thing as VAT payable, because you have collected it from customers and you have to remit it. So it becomes liability to you as a company. This is the VAT that the business output into its accounting record as what? As a liability, because they have collected it on behalf of who? Of government. You have collected it on behalf of customers, and it's not your own money, it's government money, and you have to pay it to the government. Okay? The difference between the output VAT and input VAT is what the business owes to the government. So if, like what I've explained, the net off between the 20,000 and 25,000 is what you are owing government. So it means you are only owing 5,000, not 25,000 that you charge your customer, because you have already incurred input VAT in the process of production of that particular product. Okay. Now, why are they doing this way? Is because it's going to be like a double tax. I've already paid VAT on a particular material which I use to process this, and I'm still charging VAT again. I'm remitting so much tax to the government. That is why there is that arrangement. If input VAT is greater, the business can get a refund. Okay. If instead of 20, you're having 25 as input and you are having 20 as output, no problem. You can get refund, but the process is a bit kind of hard and difficult. Now, let's look at the difference between VAT inclusive and VAT exclusive. VAT inclusive means that VAT is already included in the cost of transaction. So if your service is 20 million naira and you put VAT inclusive, it means 7.5% has been charged and it's already part of that product, okay, or services. However, the term is being discouraged, as it is always advised that VAT be isolated and not included as part of total invoice value. So most companies always put VAT inclusive, which is very wrong, because government don't want to hear about that. They want you to separate your VAT from your invoice, the normal cost of service, and then pay our own and take your own. No cheating. Nobody is cheating anybody. Okay. Now, why VAT exclusive is VAT is the cost of service without VAT. So let's assume that the cost of service of products is 20 million naira. It means you are going to apply 7.5% on that 20 million naira. That money is VAT. So it means VAT is not in the part of that amount, which is 20 million naira. That is different between VAT inclusive and VAT exclusive. And for those who are writing taxation, maybe in skills, or I think in skills, they sometimes they ask about VAT inclusive and VAT exclusive, which is going to help you in case something like that happen in the exam. Okay, so now let's see how we can calculate VAT inclusive and VAT exclusive. Now, I have this illustration with me. Now, when you say VAT inclusive amount, it means we are talking about 100%. Okay? VAT exclusive, sorry. So VAT exclusive means 100%. Okay? It means the invoice is 100%. There's no additional VAT. There's no additional charge on it. Then when you say VAT amount as of today in Nigeria is 7.5%. Okay? Then when you say VAT inclusive amount, it means you are talking about 100% of your invoice plus the VAT percentage. So addition of the two will give us 107.5%. So anytime you are seeing 107.5%, it means it's VAT inclusive. And when you are seeing 100%, it is exclusive. And when you're seeing VAT amount is 7.5%. Now let's look at this illustration as shown below. Now we have VAT exclusive. Every item you are seeing at this edge, at this point, they are all VAT exclusive. Then at the middle here is what we call the VAT amount. Then at the end there is what we call VAT inclusive. How do we calculate the invoice that is VAT exclusive? That is very straightforward. Okay. Now, they are giving us this amount to be 45,000 as VAT exclusive. What are we going to do to get our VAT? I believe you can all see my screen from here. So this is 45. So all we just have to do is simple. For us to get the VAT inclusive of this amount, we just say 107.5% divided by 100%, then multiply by 45%. Or you can say, what is 7.5% of 45? Get your VAT. This VAT exclusive means VAT is not part of it. This is the total invoice you have given. So what do? Just charge 7.5% on this. And if you want to get your VAT inclusive, it's going to be this plus this. That is the normal invoice plus VAT, and it's going to give you VAT inclusive. And that is what we have done here to get our 48,375. That is VAT inclusive of the amount. Now, let's look at the second scenario. The second scenario is when you have VAT inclusive, which is 27,360. Now, we don't know how much is the VAT. We don't know how much is the invoice of that particular transaction. So what do? All we just have to do is divide that amount by because it's VAT exclusive, and VAT inclusive means 107.5%. So divide that amount by 107.5% and multiply it by 100%. Whatever you get is going to give you your VAT exclusive. So once you get your VAT exclusive, all you just have to do is difference between inclusive and exclusive will actually give you your VAT, which is 1,908. Now, another scenario, which is the third scenario, is when you know only your VAT, but we don't know the invoice amount, and we don't know the VAT inclusive. So what do? It's very simple. Just divide your VAT amount by 7.5 because that is the amount of VAT. Then multiply by 100%. So to get the invoice number, to get the invoice amount. So by the time you multiply that, you are going to be getting 41,066. That is the invoice amount. So once you have been able to get your invoice amount, what do? Then you add the invoice amount plus the VAT. So it means if you want to send invoice to your customer, the total amount you are going to be sending is VAT inclusive amount. Though it's going to have a breakdown. The breakdown is going to be the invoice amount, and the VAT also will be under the invoice amount, and you are going to have the VAT inclusive. So the VAT inclusive is going to be the total amount you are going to send to your customer. I believe that is clear. If you have any question, let me know as we move on. I'll be keeping your questions somewhere so that you can treat that later. Now, what do we call VAT returns? Registered businesses are required to file VAT return with the Federal Inland Revenue on a regular basis, typically monthly, like we have said, 21 days in following months. These returns should include details of sales, purchases, and the VAT collected or paid. So you are going to put all the details. We are going to look at the details as we move on. Now, VAT element on goods sold is deducted and remitted to the Federal Inland Revenue through any of the approved collecting bank on or before 21 days of the month following the month of sales. So if this October is the month of sales, that is the month you carry out the transaction, you must make sure you file all your transaction for the October in the month of November before 21st of that month. Okay. VAT is paid through all Federal Revenue designated revenue collecting banks into the VAT pool account. So there's what we call VAT pool account for those who are doing PSAF. So filing documents. How do we file the documents? Evidence of payments such as bank teller, e-ticket, e-acknowledgement, etc. from an federal area revenue designated revenue collected bank. That is the document you need to go with when you want to file your VAT. Completed VAT return form, which is 002 for individual enterprises and companies. Schedule of VAT collected indicating the name of the company, the taxpayer identification number of the company, and individual on whose transaction the VAT was charged and the related amount. So if the VAT was charged on A and B company, so you are going to put details of that company in your schedule. Though your own name is going to be there, name the taxpayer, you are the taxpayer. Okay? Then who are you paying on their behalf? You are paying on the behalf on behalf of the company you charge on. So you are going to put it there. And if there's any input or output VAT, you pay the net of that. Okay? Now, after that, there's something we call VAT collection. Businesses are responsible for VAT collection. I mean, for collecting VAT from their customer. Government is not going to be the one running after customer. So all they just have to do is to come and meet you, check your invoices, check your transaction for the month, and see why are you not charging VAT on this product, And if you have not been charging, you are going to pay your own. So we are getting there after this. So and remitting it to the tax authority. Most of the companies now, they are charging VAT on customers, on their suppliers, on their customers, and they are not remitting to tax authority. Okay, so they are actually seeing calling trouble. So there's a question I'm going to attempt to that. The question is, please, is VAT remittance not on or before 14th of the following month? I'm going to explain that very soon. Now, the VAT collected is a pass-through tax, and business acts as intermediaries. Okay, so business is just acting as intermediaries between the customer and the government. Now, based on your question that you just asked, this one will also answer it now. There's something we call VAT withholding. VAT withholding is a bit different from normal VAT. And they are VAT agents, are agents of revenue collection with regards to the value added tax. They facilitate the deduction and remittance of VAT to the revenue office. And this type of agency, they are ministries, government agencies, parastatals, and oil companies. They are VAT agents. What it means is that if they are transacting with you, and you put VAT or VATable amount on the invoice you are sending to them, maybe ministry, government agencies, parasasta, and oil and gas. If you send your invoice and you charge VAT, if your VAT is 20,000, you know, they're supposed to pay you when they want to pay, they're supposed to pay you the VAT amount, which is 20,000, and the invoice, the cost of your service you want to render to them. But these people are empowered to withhold that VAT. They will not pay you that 20,000. They will pay you the invoice amount, your normal cost. They are going to pay you, but they are going to withhold that VAT, that 20,000, and they will now go and remit it on your behalf. Okay? Before, they're also supposed to remit that VAT on or before 21 days. But now, it is now 14 days for them to remit that VAT on your behalf. I believe that is clear. So they are not going to pay you that 20,000 as long as they are within this VAT agent. So they will now pay on your behalf. They are the one that is now mandatory to pay within 14 days. according to Finance Act 2022. Now, I believe that is clear. If you have any more questions, you can drop it as we move on. Now, penalties and enforcement. Failure to comply with VAT regulations can result in penalties, interest, and even legal actions. If you have been to some companies, you will see they are going to put red label that these people are not paying VAT or whatever. So it means they are taking legal action against that company. Okay? It's either they are going to pay penalties for late filing, and they are also going to pay interest for late filing. Okay? The penalty is not updated according to the Finance Act. Okay, I'm going to check that when we get there. Okay, the Nigerian tax authorities are responsible for enforcing VAT compliance. Okay, so they move around and see those who are not paying tax and those who are paying tax. So if you can see that now, you will see that there are always debt review. Tax authority can send letter to your company that they are coming so date for VAT audits. Okay, so if they notice or someone have alert, they have received alert from some people that this company has not been paying tax or so on like that. So they can just visit your company and you will see them after the VAT. If you are unable to defend yourself with the adequate documents, they will just give you tax liability, go and pay. No story. Now let's look at the registration. We have looked at the penalties, there's penalties. So in what ways can these penalties and interest comes? The first one is that non-registration. If you have been in a system for 6 months, you have commenced business for 6 months, as I explained, and you have not been paying your VAT, you have not been remitting your VAT, you have not been filing VAT, even if it is 0 rated, even if it is less than 25 million threshold, or is even more than 25 million threshold, but you just decided not to register. If you are being caught, the penalty is 10,000 naira for the first month in which the failure occurs, and 5,000 for each subsequent month. If this persists, the business premises will be sealed up after a considered reasonable period. That is, you did not register. They said you are going to pay 10,000 fine, you are not even paying. Or you are paying their 5,000, you are paying their 10,000, you are paying 5,000 every month. You don't even care. They will just come and seal up the company. It means you are not law abiding. Now, for non-remittance, that is, you are not even paying at all. You have been collecting from people, but you are not remitting. So there's a penalty of sum equal to 5% per annum plus interest at a commercial rate payable within 30 days of notification by the tax authority. So if they have given you the notification, you must pay that fine within 30 days of notification, or else you are going to be facing legal action. Okay, you'll be expecting legal action. Non-deduction. You can see that we have 3 scenarios here. The first thing that you not even register for VAT. The other thing is that you register for VAT, you are collecting from customers, but you are not remitting. That's another case. Another case is that you register as a company, but you are not deducting VAT from people. Maybe because you are trying to help them or whatever. There's also penalty for non-deduction. And non-deduction of failure to collect tax by a tax person or taxable person, I believe you still remember the taxable person, attracts a penalty of 150% of the uncollectible tax plus 5% interest above the CBN rediscounted rate. I believe that one is clear. Okay, if the total amount you did not collect, you did not deduct is 150,000 or 150 million naira, so that is 150% of it uncollected, and then you are going to pay additional 5% interest above the CBN rediscount rates. Okay, before we move on, that is the end of that. So that let's discuss before I move to withholding tax. Any question so far? Contribution? You can unmute yourself and let's discuss. Just 5 minutes before we move to withholding tax. Okay, so just 5 minutes before we move to withholding tax. If you have...
Hello, sir. Good afternoon, sir. Good evening, sir.
Good evening, sir.
Yes, I have maybe clarification on something.
Okay, fine.
Yeah. So my present company, we are into oil and gas industry. We supply oil and gas materials to oil major. That is those oil and gas that are, that are dealing into drilling of petroleum products.
Okay.
So now that raw material we are supplying them, we normally import them. But now we want to be starting the production of those chemicals, those materials in Nigeria. Now, we need some equipment which we need,
Okay.
to import from abroad.
Okay.
Now, those materials now, and when we import it, there's a VAT that's charged on those items. What are we going to do on it? And secondly, with the new introduction of institution where we want to be producing the chemical in Nigeria now, can we go for the pioneer legislation? Because that kind of arrangement, I'm not sure has been happening in Nigeria. I just need your input on it.
Okay, all right. Okay, so for that first one, you can actually go for refund. Okay, you can write tax authority for refund. Okay, and I believe they're going to process it, though it might take longer period, but they are going to refund as long as it's part of the tax VAT Act. Okay, so they are going to
Okay.
look into that and they are going to refund it. Now, for the pioneer status, if that is the first, if it is the first thing in Nigeria, it has not been, it's not been in existence before. Of course, you can write governments, though before you can be granted that pioneer status, there's going to be a lot of processes. They are going to come to your company. They are going to look at your company. They are going to look at the equipment you want to use. They are going to look at
Okay.
so many things. Okay, I can as well share the pioneer status processes with you. It's going to be
Please,
another. Okay.
yes,
Okay, so
I
I'm going to
really need it.
okay, I'm going to share it on the platform. So
Okay.
once you go through that processes and how you can go about it, then of course you can go for the pioneer status. So
All right,
just
sir.
write them
Okay.
for the exemption and they may grant it onto you. So I think
Okay.
I have, all right. I think I
All
have a
right. Thank you, sir.
question. Okay, you're welcome, sir. My question is, which category of business is qualified to pay VAT? Okay, I mean, scale businesses or online businesses, are they supposed to pay VAT also? Yes, all businesses are supposed to pay VAT as long as they are not part of the exempted services. And we have looked at that accepted services. Maybe we should go back again to see. Let's see those services that are accepted from VAT. Okay. Now, these are exempted goods. If your company is into goods and service, is into goods. Okay. So if they are medical or pharmaceutical products, they are exempted from VAT. No matter where you are operating. Okay. If they are into basic food items, they are exempted from VAT. If they are into books and educational materials, they are exempted from VAT. If they are into baby products, they are exempted from VAT. Fertilizer, farming production equipment, plant and machinery equipment purchased for utilization of gas, like what my brother just said now, tractors, plow, agricultural equipment, proceeds from disposal of bonds, they are all exempted from VAT as long as they are within this jurisdiction. But if anything is different from this, what we have mentioned, they must pay VAT. Now, paying that VAT is now divided into three parts again. It's either they will pay 7.5% VAT or they will pay 0%. Okay. If they are above 25 million revenue as a threshold, they must pay the VAT. If they are not into this jurisdiction I just mentioned, now, if they are less than 25 million revenue, no tax for them. Their VAT is 0%. Now, if the product is into zero rated VAT, that is all non-oil exports, their VAT is 0. That does not mean that they will not file. They will file, but they are 0. Their payment for VAT will be 0. That's what it means. Goods and services purchased by diplomats. I've explained the meaning of diplomat. That is, all these foreign ministers, ambassadors of other countries. They are also exempted from what? From VAT. Their VAT is 0. And goods and services purchased by humanitarian. So all these things are VAT 0 rated. So I think I've been able to answer your question. If you are satisfied, let me know. If you're not satisfied, let me know so that I can throw more light on it. Are we good to go? If there's
Good
any
evening,
other,
sir.
okay, fine. So if you
Good
have any
evening, sir.
other, okay, good evening, sir.
Okay, my question is on the area of the basic food item.
Okay.
I work with a company that does the processing of soya beans, and then
Soya beans, okay.
yes, and after processing, there are parts that customers actually buy to export. You
Please,
understand?
okay,
But
hold on, please.
from
Let me
our
try to, please mute your mic, Mr. Okay, you can go on now.
okay, so I said we deal with soya beans processing
Okay.
and then rice production. Now,
Okay.
I'm asking now because the VAT exempted item, looking at the basic food item.
Yes.
Now, does that soya processing fall under that basic food item?
Okay.
I will agree that okay, rice production already falls into that aspect, but
Okay.
the soya beans processing, which is like a raw material for other companies that now do the refined oil and sell in the retail markets. You understand? And then some other people that also come and buy in large quantity to also export. How do we trade that? Do we still fall under that category of the basic food items?
Yes,
That's my
soya.
question.
Okay, fine. Thank you. So soya beans is basic food item. Okay, soya beans is basically food items, just like your normal rice, just like your beans. But if you notice, you will see that if you go to KFC, if you go to Mr. Biggs, if you go to Tantalizer Chicken Republic, if you are buying your food, there's going to be VAT on it. So why don't you ask yourself, but this is also basic food item. It's because that one has already passed through the normal processes. It's no more raw material. Okay, so if you look at the processes, it's going to pass through in Chicken Republic and the like. So that is why there's always VAT on the food items you buy from that company, from that Chicken Republic and the like. But as long as your soya beans and you are selling without processing, like agricultural products, so that should not be VAT. So if you are the one selling to those who are, for example, if you are the one selling the rice to Chicken Republic, when you are selling, your product is VAT is 0 VAT. There's no VAT charge on it. Okay, because you are selling the raw material to them. But at the point of their own processing, then they can now start charging their own VAT on it, like the mat. And if you notice now, you will see that your Pepsi, there's VAT on it. Okay, that is why they are trying to discourage people from drinking Pepsi and Coke and the like, because the harm is doing to the body is even much than the benefits we are expecting. So I'm not sure. I don't know. Maybe that one is clear now. I don't know. Maybe I've been able to answer the
Thank you
question.
very much, sir. It's very
All right.
clear.
Okay, thank you.
Very clear, sir. Thank you, sir.
All right. So I think I have another question. Thank you. I'm satisfied. All right. Thank you. So I think I have another question. Could you clarify if VAT is still chargeable on rates for commercial purpose? Because according to SEC 46 of VAT in the FA 2019, land and building is accepted from VAT except the goods and services attached to that land or building is vatable. If we go back to Finance Act 2020, okay, that Finance Act 2020 is talking about that VAT. It's talking about movable items like maybe you have net Airtel pole. What do you call it? Transmission pole in your compound and the like. So those ones are not VAT exempted. Okay, so you are going to pay VAT on that. But if it is your normal rent, that is the rent you stay, your accommodation, that one there's no rent, there's no VAT on it. But as long as it's commercial purposes, there's going to be VAT on it. Okay, that is why if you see some companies into renters, they always charge VAT on that renter because they are doing it on commercial purposes. And from there, they are getting their revenue from there. Okay, so I don't know, maybe that one is clear enough. If it's clear, let's move on. Okay, so let's see how many minutes we have. We still have enough time. So withholding tax will not take us that much time. So if you have much question, you can drop it as we move on. So let's move on to withholding tax. Anyway, this meeting will end in the next 5 minutes. So just log in and let's continue the discussion. Okay, so let's go back to, let's start our withholding tax now. Now, what is the difference between withholding tax and VAT as we have discussed? Withholding tax is not a separate tax. Okay, VAT is a tax on its own, but withholding tax is not another tax. Okay, it's just like a VAT, it's just like a tax in advance. Withholding tax is a tax system commonly used by government, including Nigeria, to collect taxes at the source of income. It requires a person or entity making a payment to another party to deduct a certain percentage of the payment and remit it directly to the government. In Nigeria, withholding tax is governed by the Companies Income Act. So if you look at it, you see that withholding tax is not having its own act separately, but it's still governed by Company Income Act, which is CITA, and the Personal Income Tax, which is what? Which is PIT. Why these two are the one handling the withholding tax? You can use withholding tax to offset company income tax. And then you can collect withholding tax on the personal income tax, that is your payee, not the staff, but the contract staff. So withholding tax is also collected from the contract staff and individuals, then remit it on behalf of these individuals. Okay, so withholding tax is not a tax separately on its own, but is governed by CITA and PIT. I believe that explanation is clear. Withholding tax is basically an advance payment, like I said. So it's like you are paying your tax, you are paying your income tax in advance, or you are paying your payee in advance if you are a contract or you are a partner, or you are a director and the like. So don't worry, we are still going to look at that in details as we move on. Now, I don't want to rush this. May be used to offset or reduce tax liabilities. Like I said, it is an advance payment to be applied as tax credit to settle income tax liability of the years of assessment to which the income that suffered the deduction relates. Withholding tax is not a tax, but a prepaid tax. It's not a tax on its own, but is a tax you are paying in advance. So if you are paying withholding tax, you are withholding maybe company A now have transaction with you, and company A is withholding 20,000 on your behalf. They are not paying you that 20,000. They are withholding that 20,000 from you. So when company A will go and pay that 20,000 on your behalf to government, and government will credit your account with what we call credit notes. That is, you have 20,000 with government. Now, at the end of the year, when you calculate your company income tax, and let's assume that your company income tax for the year is 50,000. Instead of you to pay that 50,000 to the government will say, fine, you are owing up 50,000, we are also owing you 20,000 of that withholding tax. So you are going to pay the net of the two in cash, okay, or through your bank payment. So it means you are going to pay only 30,000 as your tax liability for that year. There are varying rates of withholding tax ranging from 2.5% to 10% for companies and 5% to 2%, to 10% for individuals, depending on the what? On the transaction. So the transaction will determine how many percent you want to charge on withholding tax. Now, you can see this schedule I have prepared. When the first column is for companies, the second one is for individual. Royalty, 10% for companies, 5% for individual. Contract of suppliers, 5%, 5%. Contract of construction, dividend, technical services, consultants, professional services. So if you are into professional services, you know that you are going to pay 10%, you are going to withhold 10%. And if you are in, okay, so sorry, the thing just went off. I didn't know that it's not connected. Okay, so let's continue from where we stop, please. Okay, so we stop at okay, so we stop at this point. We have discussed all the companies and the percentage of each of the transaction. So now I was trying to explain the withholding tax. I said in Nigeria, there are two main types of withholding tax, which I have explained one during our discussion on VAT. So that is the VAT withholding, which is mandated, which is required by agencies, oil and gas companies to withhold on behalf of government and remit the same thing to the government at the end of the day, which is 14 days ultimatum to remit to the government. I think we have discussed about that. Now let's move on. Now, companies withholding tax, this is applicable to payments made by companies, such as payment for services, contracts, and loyalties. So what we are saying is that as a company, as long as you are registered to pay tax, as long as you are a company, you are required by law to withhold tax, to withhold either 10% or 5%, depending on who and who you are dealing with. Now, let's look at this illustration. let's assume that you have individual, someone who wants to build or you want to do something for you in your company, and they have charged you, we are going to bag this material, we are going to buy this material, we are going to buy this material, and I'm going to collect my own labor. My labor is going to take me 20,000. Now, withholding tax, let's admit that the labor is 10,000, or let's say the labor is 100,000, and the total material they are going to buy is 400,000. So they are giving total invoice of 500,000. Where are you going to apply your 5% on? Is it on that 500,000 or on 100,000? So withholding tax is going to be charged on 100,000. It's going to be charged on labor, not on the total invoice. Okay, that is for companies or services on contracts. So it now depends on the contract. The contract is going to be charged on the whole contract value. Okay, and loyalty and the like. So now, once you charge this withholding tax, the next thing you must do is to go and pay on behalf of this company. Okay, we are using our tax promise now. Thank God for technology. So you file on their behalf and make payment on their behalf immediately. Now, the value added tax withholding, I think I've explained this. This is for government, oil and gas, and the parastatals. They can withhold, instead of them to pay you the VAT, which you have already charged on your invoice. They will not pay you that VAT. What they are going to do is that they will only pay you the invoice amount, withhold the VAT is supposed to charge, is supposed to pay you, and pay on your behalf to the government. Okay, so you don't even have any problem, you don't have anything to do with them. And in a case whereby you are into input and output VAT, which I have explained earlier, all you just have to do is file your output VAT, okay, file your input VAT. The net off is going to show on your tax promise. They have already updated that tax promise now, as at now, that you are going to be seeing the net off of the two on your tax promise. Though it might going to take a time, but the process is going to work. Okay. Now we have all organizations or body making payment to suppliers of goods and services are required to make deductions of withholding tax and remit to the tax authority as payment has been made to supplier or vendors. So as you are paying the vendors or supplier, you must also remit that same thing. But most companies, what they are doing is that they are going to withhold that withholding tax from you. They will not pay you withholding tax, but they are going to pay you your service charge. I mean your cost of service or goods or service or whatever they want to pay you. They will now keep that withholding tax with them for long. Whereas you have to collect that withholding tax. They're supposed to pay on your behalf and use that withholding tax they pay on your behalf to reduce your own tax liability. But most companies, what they are doing is that they will not pay that withholding tax on time. And that is going to affect you in future. Withholding tax on contracts, like I've explained. How do we charge withholding tax on contract? You know, contract is always more than 1 year. Not always, but most of the contract always more than 1 year. For example, when Dangote want to construct road or Julius Berger, the road or bridge you are going to construct might be more than 1 year or 2 years. And they are still going to pay withholding, there's going to be withholding that on that particular transaction. So what are they going to do? Their withholding tax is going to be on the completion. Okay, mobilization fee is liable to withholding tax. So if you are paying them in advance to start that particular project, that amount you are paying them, you are going to charge withholding tax on it. In addition, every certificate of work done issued at different stages of contract must be subject to what? Subjected to withholding tax of 5%. So what happened is that if they have 15, they want to do 15 bridges and they want to construct 70 roads. Once they are done with bridge and you are paying them for bridge construction, you must withhold withholding tax on it because they have completed that part and the certificate has been issued For every construction, for those who are in construction company, you will know that they always what we call certificates for every completion. For example, if you want to recognize your revenue, and if that contract is going to be more than 1 year, and you want to recognize your revenue for the year, what are you going to do? They have to value how much they have covered in that contract. So let's assume that the contract is going to be 2 years, and the value of the contract is 20 million. And in a year, they have been able to cover 10 million of that contract. So 10 million of that contract is going to be what I'm going to declare as revenue for that year. Okay. And when you are paying them that 10 million, you must withhold your withholding tax on it. For those who are working in construction company. However, the amount of withholding tax being deducted at source from the mobilization fee paid at inception of the contract should be adjusted, deducted from the withholding tax due on the next payment in respect of the certificate at work done issue, and the balance should be remitted to the relevant tax authority. So let's assume that the total contract is 20 million, like I said, and you have already given them you have mobilized, you have paid in advance like 5 million to start the contract. And in the first year now, okay, in the first year, the value of contract they have done is 10 million naira. And you are charging 5% on 10 million naira, forgetting that you have already charged 5% on the first 5 million you charge as a mobilization fee. So it means you are double charging that particular company. So what do? There should be difference. So you are going to deduct the difference in that the next payment you are making. So I believe that one is clear. It's not that difficult to understand. Withholding tax is not that much. Now, withholding tax also have an exemption like VAT. Okay, what are the exemptions of withholding tax? There are certain transactions that are exempted from withholding tax, such as direct purchases across the counter. What do you mean by direct purchases across the counter? That is, you want to buy materials, you want to buy pepper, you want to buy tomato in large quantity, and you are going to market. Maybe you go to my 12 to buy in large quantity. That kind of transaction, there can be withholding tax on it because you are buying it across the counter. Okay, you are buying it in the open market, so there's no withholding tax on that, except the new tax that the new regime is trying to introduce. But currently, there's no tax or withholding tax on that. Direct purchase of raw material from supplier at distinct from contract of supply. Okay, contract of supply means your normal core business, your normal business activities. Okay, then sales in the ordinary course of business. If you are still in your normal transaction, there should not be withholding tax on that. Or imported goods. Okay, if there is any imported goods or you have imported goods, there should not be any withholding tax on that. Interbank interest. Interbank interest. Maybe you save money or you are paying for example, you invested in UBA and there's going to be interest in your investment. When they want to pay you, they're supposed to withhold tax. Okay, they're not going to pay you the whole dividend, the whole interest on that investment. But in a case whereby you are not collecting that money directly, you are asking them to pay into another bank. So there's not going to be withholding tax on that. That's what it's trying to say. Income excepted from income tax. So any income that is excepted from income tax, there will not be any withholding tax. Don't forget, this thing is governed by company income tax and PITA. Okay. Interest on bonds, dividend distributed by holding companies. All these are accepted from withholding tax. Now, from that, let's go to credit note. What do you mean by credit note? Credit note is just a document, or let's say a certificate, if we are to put it that way. This is the document issued by the tax authority showing that a taxpayer has suffered tax deduction at source. So it means they have already deducted tax from you. You have already paid a certain tax on this particular transaction. And content on the credit note is that withholding tax credit note, we generally include the following information. For those who have not seen it before, it is very, very simple. Credit note number will be there, the name of the agent or the taxpayer who deducted and remitted withholding tax will be there on that certificate. The name of the beneficiary will be there. If company A is the one that deducted from source, they are going to pay on behalf of company B. So the name of company A and company B is going to be on that credit note. The nature of transaction is going to be on that credit note. The date of transaction is going to be on the credit note. The name of the bank through which remittance was affected is also going to be on the credit note. The amount deducted, if it is 20,000, is going to be there. Then period cover, if it is within January to December, if it is within so amount, so period, is going to be on that credit note. Now, take note of this. Withholding tax credit notes cannot be used to offset late filing, late return, and penalties. Penalty is not tax. So withholding tax credit notes cannot only be used to offset income tax due. What we are saying is this: there's difference between tax liability for the year, and there's also there's another thing, tax fine or penalty. If you're supposed to pay or you're supposed to file your tax on or before so date, and you fail to do so, there is fine and penalties for that. Okay, that fine and penalties, you cannot use withholding tax to offset it. That must be paid with cash by the person you pay into the bank by cash. Okay, but if the tax liability for that year is 20 million naira and you have withholding tax of 19 million naira, it means you are going to pay only 1 million naira as tax for that year. So 20 million minus 19 million withholding tax. So the difference is 1 million naira. That 1 million naira is what you are going to pay by cash. Then you now pay the penalty or fine with cash again. Okay, what happens if you are unable to exhaust your withholding tax for that year? So let's assume your withholding tax is 50 million naira, but your tax liability for the year is just 20 million naira. What will happen? So it means you are not paying any tax for the year. All they will just do is the 50 million naira minus 20 million naira. Then you will still have a credit balance of 30 million naira. Okay, I think I have a question here. So hope we can get all these notes. Yes, I'm going to share it on the platform. As long as you are in our platform, you are going to get it, or anywhere you get the link from. Now, the name of the bank through which remittance was affected, the amount deducted. Okay, I think I've explained all this. So let's move to the next one. Now, the next part now is how do we file withholding tax? Document required for filing the withholding tax. Evidence of payment such as bank teller, e-ticket, acknowledgement, etc. from an federal inland revenue designated revenue collecting bank. 2. Schedule of withholding tax deducted indicating the name of supplier, vendor, taxpayer ID of the company, individual from which the tax was withheld, and related amount. Okay, there's going to be a schedule we are going to prepare, and we are going to look at the content of that schedule very soon. So the schedule is what we are going to upload in your tax promat. How do we use the tax promat? For you to file your withholding tax, to file your VAT, to file your CIT, which is a company income tax. You are going to go to tax promat when you log in. Then you look at the tax dues. So under tax due, you are going to see the type of tax you want to file, and you follow the process. So when you get to the withholding tax, you can the schedule is on the tax promise there. So you can download the schedule first and then follow the necessary process you are going to do now. If you want to file your VAT, you download the schedule as well and follow the schedule as directed or as stated in that platform. Now, withholding tax is paid into federation account through all federal inner revenues designated revenue collecting banks. Relevant documents for filing withholding tax include evidence of payment to an authorized bank, that is the e-ticket. Then the schedule you are going to upload, that is schedule of withholding tax deducted, showing period covered, name of suppliers, address of the on the person you are paying on behalf, nature of the supply, gross amount, withholding tax rate you use, because the tax rate is differ. So you must state the tax rate you are using, withholding tax amount, TIN number of the agent making remittance, and the TIN number of the beneficiary. So if the company A is the one paying on behalf of company B, both company A and company B will have their TIN number on that schedule. Okay, and don't forget, don't use comma, don't use full stop, okay, in that schedule. That is why many people, when they are uploading, they will say it's not uploading and the like. So because of punctuation mark, don't use anything punctuation mark in that schedule and you are good to go. I think I have another question. The class will still be open for question at the end of the lecture. Okay. Let me see the question. Well done, sir. Regarding the schedule of withholding tax to be uploaded on tax promise, I have tried uploading it several times. It's giving error. That should be the error. Maybe check it again. The first thing is that upload the schedule from the tax promise. Don't use another schedule. Don't use your own admin. Download that schedule from the tax promise and fill all the necessary details there. But be mindful of the comma, full stop, and the likes. So make sure you are not using anything punctuation mark. Sometimes, if that is not the cause of the error, it might be network. So it can be either network or it can be that punctuation mark you are putting. That could be that's just the only thing that can cause the error from that aspect. Okay, now let's move on. Now, what are the contents of the schedule we want to prepare? So the name and address and the depositors, TIN number of agent of depositor, the name and address of the taxpayer or beneficiary, TIN number of the taxpayer or beneficiary, the nature of transaction, the gross value of the business in which withholding tax is being deducted, the applicable tax rates, the amount of withholding deducted, and the period cover. I think I've explained this before. It's like I have another question. Is there penalty on late filing for withholding tax? Sure, we are getting there. We are almost there. We are going to discuss that as we move closer. So there's tax for every tax. There is fine and penalty for it. If you are not paying your payee, there is fine and penalty. You know, government, they are also wise. If they leave people to pay anytime they like, many people will not even pay. That is why there's always tax. There's always there's always penalty and fine on every taxes. Okay, either it's withholding tax, VAT, or your withholding tax, or whatever it may be. Now, note, confirmation of withholding tax credit notes took longer time because of the manual processes involved. Confirmation will now be done online with coming of the Federal Inner Revenue web portal. Okay, so you can log into your tax promise. You are going to see those who have remitted on your behalf and those who are yet to remit on your behalf. And from there, you can run after on the company that, see, you have deducted withholding tax from us, but we are yet to see you crediting our accounts. So from there, you can follow up and you are fine to go. Don't forget, withholding tax cannot be used to offset penalty or fines. You must pay your fine and penalty by cash, while withholding tax can only be used to offset company income tax. Now, on other hand, you can also use withholding tax to offset the partnership at assessment. For example, A and B and Co. chartered accountants. You know, they are going to be assessed based on partnership basis. So if partner A is going to pay 20,000 as a tax and he has suffered withholding tax somewhere else of 10,000, it means instead of that partner to pay 20,000 as withholding tax, as a tax liability for that year, you are going to deduct withholding tax of 10,000 from there. So it's going to pay balance of 10,000 with cash. So I believe that is clear. The same thing to the contract staff. The contract staff, you will withhold 5% from their salary as long as they are not your normal staff. They are not paying normal payee, but they are going to pay withholding tax on their payment when you want to pay them, okay? Now, fine and penalty for not remitting or for not filing withholding tax. Penalty for late filing of returns is 25,000 naira for the first month. It occurs and 5,000 for each month subsequent month. If the failure continues. So if you continue to fail to remit and to file it, then the penalty also continue to pile up together. Okay, I think I have a question. Is there a way to check company that file for outputs tax for goods purchased? Okay, you mean I'm not sure I get your question very well. You mean the output VAT we are talking about here is the VAT payable, and you are the one charging the VAT as a company. For example, if company A is the one, okay, like as of accountant now. So the VAT you want to charge on our services is what we call output VAT. Okay. And when the customer are paying for that output VAT, it's not our own money, it becomes our liability, and we have to go and remit to the government. So the company that are paying that VAT, there's nothing even concern you about that VAT again. If they like, they should pay. If they like, they should not pay. Except if you are into manufacturing, whereby you are looking for input VAT. If that amount is your input VAT, okay, and you want to use that input VAT to net off your output VAT. In that case, once you are filing, once you open your tax promise is going to give you all the schedules of your input VAT. It's going to give you information about output VAT, the one that have been credited to your account. And from there, you can know that this company A and B has not remitted my VAT, and you will not be able to claim your input VAT. Okay, but you can alert the tax authority to run on your behalf. Okay, I think that is what you can do. If I've been able to answer your question, I believe I've been able to answer your question. Okay, let's move on. We have been able to, okay, I think there's, yes, thanks. All right, you are welcome. So we have been able to treat our penalty and fine. What else again do we have to look at? I think that is the almost end of the class or webinar. From that part, there's nothing again. Thank you for your time, for attending and for listening. So now let's look at if there's any other question before we end the class. So let me know if there's any question, clarification, you need more clarity on this. So this material, this slide will be available. I will send it to the platform immediately. I can as well upload the videos for those who miss the class, or for you as well to listen to it over and over again. And in case you have any issue with your maybe any challenge or whatever in your company, you can as well contact, you can discuss, you can profit chat, and we are good to go. Thank you, sir, for the good lectures. You are welcome. Thank God. So let me just wait for 1 minute. If there's any comments, you have any question, you have any discussion before.
Yes, sir.
Okay. All right.
Yeah, I need a little bit clarification on that withholding tax schedule.
Okay.
Now, assuming there's a transaction that let's take for example now that is a company that there's a mechanic company that want to repair our car, and the
They want
value
to
of
repair,
the
sorry. They want to repair what?
repair our car, the company car.
Okay, okay, fine.
Okay, now you now give us a quotation of the parts that we want to buy.
Okay.
Let's take for example is 200,000. I would
Okay.
have said okay, his service charge is 50,000.
Okay.
We are going to charge our VAT and withholding tax on that 50,000, not on the total value. Am I right?
Exactly. No, it's
Okay, now
it's going to be on the service charge.
on the service charge, exactly. Now, when we are preparing our schedule, it is that 50,000 we charge our VAT and withholding tax on. So that's the value we are going to put in our withholding tax schedule, right?
Exactly. Yes.
Okay.
The amount you charge withholding tax on, or the amount you charge your VAT on, yes.
Exactly. All right, sir. Thank you.
All right.
Thank you, sir.
I think I should clarify this. I think I should please mute your mic. I think I should clarify this one as well. Now, let's assume you want to charge your VAT on invoice. Let's assume a customer is giving you invoice worth 20 million naira, and the supplier has already charged VAT on it. Let's assume the VAT on it is 20,000, or let's say 500,000. So it means 20 million plus 500, that is 20.5, right? Now, if you want to charge your withholding tax, your withholding tax is not going to be on 20.5 million naira. So your withholding tax is going to be on amount before the VAT, which is 20 million naira, not amount plus VAT. So you are going to withhold you are going to withhold that withholding tax rate. You are going to charge that withholding tax rate on the invoice amount before the VAT. Are you getting that now? Then the person that want to charge your VAT to will also charge VAT on the invoice amount. So I want to make sure that one is clear with us. Okay, so I think I have so many questions as well. Let me see. Thanks for the lecture, sir. You are welcome. Many thanks. Thanks for your lecture. It is well detailed. Okay, you are welcome, sir. Okay, so I believe we are good to go. Let me just wait for 30 seconds. If there's any other question before we move on. So this thing will be uploaded to the YouTube so that you can watch it over and over and you practice as well. And if there's any other further question, you can drop it on the platform. Okay, so I think there's no other question again. That is where everywhere is silence. Okay, so thank you very much. See you the other time. Don't forget our normal training is coming up in November, which is going to be on financial statement, financial modeling is also free, both physical and online. So invite your friends to attend and see you there.
Please share the timetable, sir, for the training.
For the training. Okay, yes, I will do that. Are you on our platform so that we know? Are you in the House of Accountant WhatsApp?
No. Please, can you share the link so you can register as well?
Okay, fine. Just private.
Please.
Okay, where do you get the link from? Is it from the? Okay, don't worry. Just private chat me. I will send the link to you.
Okay. All right, sir.
All right, yes.